Investing in AI. Nvidia's latest move changes everything. Imagine pouring countless hours and resources into a business, only to see it struggle because of forces beyond your control. The world moves at breakneck speed, and staying ahead requires more than just a great product or service. It demands an acute awareness of current events, shifting markets, and emerging technologies. Success in business growth hinges on the ability to interpret these external factors and pivot accordingly. For instance, Nvidia's recent stock moves provide a real-time case study in strategic adaptation, shedding underperforming assets, doubling down on promising ventures, and navigating the AI revolution with precision. Today's business climate is riddled with challenges: inflationary pressures, supply chain disruptions, geopolitical tensions, and rapid technological shifts. The playing field is far from level, and businesses that fail to recognize these headwinds risk stagnation, or worse. Take SoundHound, for example. Nvidia's decision to cut ties with the AI-driven voice assistant company sent its stock plummeting, exposing a vulnerability that many tech firms face: over-reliance on a few key investors. Companies that fail to anticipate shifts in investor sentiment or industry trends often find themselves blindsided by the fallout. Yet, within these challenges lie opportunities. Nvidia's simultaneous investment in WeRide and Nebius signals where the smart money is flowing. WeRide's push toward global robotaxi dominance highlights the growing demand for autonomous mobility, while Nebius's AI-centric cloud platform underscores the increasing need for scalable, high-performance computing. Businesses attuned to these shifts can position themselves to ride the wave rather than be drowned by it. Adaptability is no longer optional, it's a survival trait. The ability to read market signals and make strategic decisions based on real-time data is what separates thriving businesses from those struggling to keep up. Consider ARM Holdings. Once a dominant force in semiconductor intellectual property, its stock dipped as Nvidia trimmed its stake. This decision speaks volumes, perhaps a reflection of increased competition or Nvidia's strategic reallocation of resources toward higher growth areas. Companies operating in tech-heavy industries must constantly assess whether their partnerships and investments align with long-term goals. Failing to do so can mean missing out on the next big opportunity. It's not just the tech giants that need to pay attention. Every industry, from retail to manufacturing, faces disruption. Amazon's ascent to potentially surpass legacy consumer giants in revenue underscores the power of innovation and agility. Companies that remain static, relying on past successes, are destined to be overtaken. The retail apocalypse, once thought to be a buzzword, is now an undeniable reality as traditional brick-and-mortar stores continue to struggle against e-commerce dominance. Businesses unwilling to integrate omnichannel strategies, embrace data analytics, and optimize supply chains will find themselves increasingly irrelevant. This dynamic extends beyond corporations to small and medium-sized enterprises, SMEs, as well. While the headlines often focus on multi-billion-dollar transactions, the principles remain the same for businesses of all sizes. Strategic divestments, like Nvidia's sale of SoundHound, can be mirrored by small business owners reassessing their product lines or service offerings. If a particular segment isn't yielding the desired results, it may be time to cut losses and reinvest in higher potential opportunities. Likewise, investments in cutting-edge technology, whether AI-driven analytics, automation, or digital marketing, can provide the competitive edge needed to thrive. The key takeaway is clear: awareness and action must go hand in hand. Businesses that stay informed but fail to act on insights are just as vulnerable as those operating in ignorance. It's not enough to know that AI and automation are reshaping industries. Companies must actively integrate these technologies to remain competitive. Nvidia's moves reflect a deep understanding of where the future is headed, and businesses across sectors can learn from this approach. The lesson isn't about blindly following market trends, but about making informed, calculated decisions based on where the industry is moving. Even as Nvidia adds to its portfolio with companies like WeRide and Nebius, it maintains stakes in applied digital and recursion pharmaceuticals, signaling a belief in AI's transformative potential across multiple sectors. This diversified strategy mitigates risk while capitalizing on high-growth opportunities. Similarly, businesses must avoid putting all their eggs in one basket. Diversification, whether in revenue streams, product offerings, or customer bases, ensures stability even in turbulent times. Market volatility isn't going away. External shocks, economic downturns, and technological disruptions will continue to shape the business landscape. The difference between those who thrive and those who falter lies in preparation, adaptability, and execution. Nvidia's strategic maneuvers aren't just financial transactions. They are a masterclass in navigating uncertainty with agility and foresight. Businesses that internalize this lesson will position themselves for sustained growth, no matter what challenges the future holds. Check out our other videos on financial news. Thank you.